All right, we're back. I'm gonna try and do this again. I tried to film a little quick update right before I showed how Options Autopilot auto trades while I stepped away from my desk. I will show that clip towards the end of the video, so stay tuned for that. I'll try and make this brief, but just want to kind of go through current positioning. Haven't done an update for maybe a couple weeks at this point. So I wanted to do another one and kind of just see where we're at in the market, get my thoughts, how I'm positioning and how I'm kind of viewing things. For the most part, I'm just having, Options Autopilot put things on, take it off. I might tweak things here and there just because I might see something, but other than that, I'm just kind of letting it go and things are closing on their own. So let's just kind of jump into Tasty right here. We can look at Autopilot real quick. I mean, basically P&L up to date, year to date up almost $2,200. I think it's slightly different than what Tasty shows. Well, I'll have it off there, but it's a little bit off just because the futures prices move around after hours, and we don't have it updating right now in the after hours. But let's go through even just what happened today. And we'll do that quickly. In my apartment conference room, I don't know how good the internet is, so hopefully this doesn't take too long. But that's how it goes. Yeah, my microphone was not working very well on my actual webcam in my office, which I didn't test it, of course, before I tried to, so could barely hear what I was saying. You'll still be able to see the executions happening, but it wasn't really picking up my update. So I just wanted to kind of do this a little bit separately. You can see that it is February 5th. So we're later in the day. I filmed it earlier in the day. I show that as well. So you'll just see how that is. But these are the ones that executed today. Well, all these did. So what ended up happening is this morning, shortly after the open, gold was up, hitting a new high today. I've been consistently selling put spreads on gold right here, 50 days to expiration. Gold futures, let's see here, down a little bit right now, but basically since the end of last year, and as we can see, it's worked out. I've been selling put spreads and not doing the 1-on-1 on gold because I think I've mentioned before that the margin is a little bit odd. You don't get a very good rate of return or return on your margin risk when you're doing the 1-on-1 on gold. I haven't really looked into why that is. I just know that that's the case. So I've just been doing straight up put spreads for the most part, and it has worked out. I guess we might as well just kind of jump into some of these things and why they are doing what they're doing. Let's just pull up the chart on gold futures. So you can basically see hitting a new high. I don't know. We'll see if it pulls back. I mean, I put it back on and obviously it's down already. I feel like it might pull back to this level, but I mean, it's hard to argue with this trend, and usually when it's hitting new highs, it's going to continue. There's no guarantee of that. I did hear some people talking about the U.S. debt. I mean, it's been in discussion for a long time. They always raise the debt ceiling. I do think that we are at a point that it is pretty critical. Doesn't matter who you voted for. I think it's something that needs to get handled. I didn't like either candidate, to be honest with you, and but I think that hopefully now that the people that are in there, they can do something good. And by good, maybe not always the easy choice, but we'll see. We have to do something. We can't just do nothing, in my opinion, and like barely dent what we're spending. But I think the reason I mention that is that if that narrative stays around, that could just continue to push gold higher, especially if people are concerned and I think supposedly the next debt ceiling is June. And so it's possible that it at least gets supported into that time frame. In general, I'm selling put spreads. Let's see, where is this one actually at now? Okay, so 26.75 is my short strike put. So, I mean, I wouldn't say it's too far down. I mean, it's basically right around here. It's annoying that we lose the drawing, but it's basically right around here. So that could be tough. That could get pressured if we have any kind of pullback, and I might get stopped out of it. But I'm just going to let it go and let the automation handle it. And if I get stopped out, it'll, open up another one and do it again. And that's the whole point of why I think it's helpful, is it just does it no matter what. I think the consistency is key, and if you kind of just keep doing it, obviously, as we've talked about before, if you don't know what I'm talking about, do have a course. Ran into some technical issues with the Wix templates. They're very bad in my opinion for the course, but we're getting that fixed up. So if you go there, request access on optionsautopilot.com, the links are below. We'll get you in there, and hopefully it'll make it a lot easier. It's just very clunky as is, and I didn't know that going into it. So that is unfortunate. But so that's the status on gold. I think that like I said, the story is there to kind of continue, or at least probably hang around these levels. If there's still those types of concerns around, the government debt. The other stuff was crude oil. So crude oil closed. This one was interesting. This is some of the, I guess, stuff that we're adding into Options Autopilot is kind of minimum spread requirement. Right now, it doesn't necessarily have a minimum spread you can set. And these freaking soda waters. I think the original trade that opened was like a $50 credit or something like that. So it ended up hitting that actually pretty fast. And if we look at this is another interesting thing, is that I had another one on. Sorry, I keep jumping back, but I just wanted to display the point that, like, if you are doing this consistently, you can still make money. So obviously we put it on. Okay, we did put it on. No, we took it off at 14. I'm just trying to get my bearings here. Okay. Yeah, pretty much. Anyways, I'll have to look at this again. But for crude oil, we did put it on, and it has been profitable. Year to date, we've got 270. I'm trying to think if it was, maybe that is accurate. There were some that we did before I was running it on an automation, so I don't know if I imported those, but I think that's correct. So basically, I put on the 111. I've been running the 111 on crude oil, and you can look at the chart. If you recall from my last one, we were kind of talking about how, originally my thought process was it had broken this trend line. And it kind of looked like, I don't know if you want to say it's a pennant, but it doesn't really matter what the shape is. This is potentially a continuation pattern. And I'll do another video on technical analysis and technical versus fundamental, because I know that's such a huge debate. But either way, we're just using it for risk management. It seemed like it was breaking out, and it had come. The hell am I doing? There we go. I was wondering why it looked a little bit strained and a little bit different than I recalled. So this was the shape, and it was breaking out here, and we did a 111 probably around this range. It basically had accelerated. I think we closed it out for profit and then did another one around here. I'd have to double check, but it wasn't open for very long. Actually, let's What is our average? Average time in trade, 14 days. I just don't know if all these are, because we were running some tests on some things too. Okay, so I guess we only have the one for this year, but I did one last year, but I could be wrong. But anyways, you can see we did this for 41-cent credit and bought it back for 14-cent credit. So 66% profit. So that seems about right there. But I think it did end up closing even after this had pulled back some. So it's showing a little bit of resilience of the 111 when you kind of get up money. It is kind of a nice and flexible position. I think it's going to come back either more towards this level, should have some support here. So the other 111 that just went off today was this one. So 65, 63 and a half, and 56.50. So basically our credit, $250, is the potential. We're obviously targeting 70% of that. So basically 65 is our long put. So if we're looking at the chart, should probably just have this on two screens. I'm sure there's a better way to do it, but I tried to look at this and just kind of make sure that this made sense. I mean, ultimately our long put is down here. So if things really start to come down, if they come down quick, we're probably gonna get stopped out. But if they come down slowly and kind of sit around here, we should be fine. And if things start to drift lower, it's possible that we even get into the bear trap area and make even more money. But we can see that we've got pretty good distance, and then our other short strikes are even, one's at, I think it was 63 and a half, and then the other one was even farther down. So let's just look at USO. Tasty doesn't really string the price action of the futures together, so oh, that's interesting. Does this kind of look like the NASDAQ? Anyways, this was kind of a fake out, right? It was hitting a new high, and then obviously it's pulled back since then. So we look at this chart in general, long term. I mean, I think our other short strike 10 delta is $58. This web version is awful as I'm seeing it. So yeah, 56.50. So basically if oil can get all the way down to 56.50 in 99 days, is that possible? Sure. I mean, thinking about that, I almost want to even turn off my stop loss. That'd be stupid. I wouldn't recommend that, but I just don't think it's going to happen. And if it did, I mean, we would have a pretty wide bear trap area for it to make money. So, but I just kind of chose the 101, just had it run whatever the settings were. So that's what we kind of opened again after closing that other one, basically with a break even, it looks like, because yeah, this is like break even because of that like small credit we originally got. MES, some of these just closed more recently. I think last time I did this, I was up like $1,200. Now I'm up $2,200. So in about another week, I'm up another $1,000. It's obviously not going to always continue. I would say that that's fairly lucky and unprecedented. We can already see that, some of these that were working, I mean, gold's been working, now it's down. It is, I guess, helpful and nice to see everything green, but that's not always going to be the case. I wonder if I don't know why this seems so large, but usually this would show a little bit more over here, but it's helpful or whatever. Bitcoin closed down this other one for a profit. Again, the system just closed it. In general, automatically, yeah. So we bought that back at 14 cents. So where was it opened? 128. I'm just seeing if this No. I mean, I guess 2 days. Is that possible? It's entirely possible that happened. Either way, definitely have made money on Bitcoin put spreads. We did have that pullback, and now I guess I'll have to look and see where it's at again. So yeah, I guess we've made $140 year to date on that. Okay, so yeah, it was kind of moving around. I'm probably gonna put this on again tomorrow, just because I want the diversification of having that asset class on there again. The reason it didn't go off the other day is it had hit allocation limit. So I already have the one contract spread on in general, and I had 5 contracts for my automation, but I only had $2,000 allocated, and so it basically was over the allocation limit, so it prevented the trade, as it should have. But then it doesn't retry, which, we'll see if we want to change that. But as of right now, I would say we don't want it to retry. So I just adjusted down to 4 contracts and upped the allocation a little bit, so that we should be good there, and I can run it tomorrow. I think the storyline for Bitcoin is still intact. Our president himself is basically a crypto pumper, I would say, which I think is a little bit disappointing. Again, it doesn't matter what side of the table you're on. I just can't believe that you're kind of using the office of president to pitch a coin. Definitely a way to make money. But either way, like we said, doesn't matter, what the market is. You trade the market you have, not the one you want. And, if that's like a bullish element to the story of Bitcoin, then I would say you got to trade accordingly and kind of go with that narrative. So I would say right now we're kind of sitting around here. I would be a little more cautious if we break this level, if we break below 52, just because that kind of would signal a short-term top. It would be interesting if that happened, just because it kind of would spike above $100,000 and then pull down. I will mention what I don't fully understand exactly what MicroStrategy is doing. You can comment below. From my understanding, I thought that he is basically getting loans to buy Bitcoin. And I'm wondering if he has like a break-even price where if for some reason Bitcoin sold off, I'm not saying it's going to or expected to, but let's say it sold off and he's got an average price of, $80,000 and he's borrowed money and he doesn't generate income from any other source of business, I don't think. I still am unclear on what he was doing previously, but I'm curious if that would cause almost like a margin call for him. I don't fully know. I'm sure there's a way against that, but I think people need to be maybe cautious there. It could be a decent way to play the kind of trend of Bitcoin. It's effectively a levered play, but in my opinion, if you want a levered play, you can just do it directly like this with options. But I get that it's maybe nice to have someone manage it and you don't have to worry about it. But it does swing around quite a bit. So I'd be watching this level. But in general, I'm just going to put it on. And if I get stopped out, it probably means that this is breaking down. And it will, go on the next week, theoretically, after that happens. So we did gold, Bitcoin, crude oil, bonds. Bonds have actually been rallying. Do you want to do... We'll do ZB, I guess, or we can look at TLT, but depending on which one you want to choose. I've been trading the futures contract. Obviously, people are talking about inflation and the tariffs being inflationary, but we can kind of see the bonds are getting a bid here. Again, that's one of the reasons that I wanted to do the 111s, and obviously that's kind of directional. It's not very directional. but it is directional in the fact that I kind of thought that we would either be sitting around here or it could be, getting a bid. And the whole point is obviously just to have uncorrelated assets here. So let's look at TLT in general. So let's say we might be coming, not that I think that this trend is really going to get followed too much. Hasn't been touched that much. But my only point being is that, we kind of saw it get a little bit extreme at the first of the year. Now it's kind of coming here, popping back. You might be hitting some resistance here, but I think in general, it's kind of showing that maybe it's putting in a bottom, but hard to say exactly. But until, we're seeing otherwise, or until it makes like a new low, I wouldn't change my strategy in general, because the idea is that we're just doing it consistently as the market moves around. And I'd love it to end up in a bear trap at some point, and we're earning multiple on our money for these. So this one I don't think I'm getting that much in terms of, oh yeah, no, this one did actually pop up, so guess I should look at these a little bit more. So okay, so we're at 46.9% profit already on that. ES, this one was not working out originally. If you guys recall the other video, my MES and ES were kind of sitting around break even. And the market has now kind of ripped, right? I mean, these are pretty close to hitting profit targets. And I'm trying to avoid doing anything. I just want them to hit it. I mean, just like the other ones, I was walking to lunch and got a notification that my crude oil one had closed a couple days ago before I had opened these other ones. And that's just fun to see that, even if maybe I'm biased because we built it, but it's just, I used to have to monitor that so much more. And so it's just cool to see that it's just managing it for me. And it's probably for sure for the better that I do that. This is holding, I don't know, maybe 60% of the cash at the moment. I need to fully understand, I'll be honest. I mean, this is just short-term treasuries, and this is the lowest expense ratio Treasury ETF. That's why I chose this one over Bill. I've seen other people use Bill, BIL. I don't know exactly why, because it's like double the expense ratio. And I think that SGov is maybe more liquid, but I could be wrong on that. Either way, I don't fully understand how it determines the P&L, because obviously it kind of goes up and then it pays out your dividend, and maybe it goes back to zero, and that's what it is. But then it's weird that it's not considering the dividend in your P&L. It doesn't seem like. So I need to do a little bit of research as to why that is, because I was basically up like, let's say $70 year to date, and then all of a sudden I was negative a little bit, and now I'm obviously negative a little bit still. So I don't know if, P&L open minus 23. I don't quite understand exactly actually what the deal is there. Maybe this will. Maybe this will show it. We're going on an adventure. I wanted to make this quick, but now it's getting too long, so I apologize. But this is just stuff that I think people should think about. Okay, here's the year to date. Let's see if it'll show it. Okay. That's interesting. Again, that's something to definitely look at. That's a pretty high commission and fees. This is some of the downside of futures. Obviously, you get the benefit of some of the tax treatment, but you definitely get hammered with some fees here. Yeah, I'll have to look at ESCO because it's kind of saying no gain, which I don't think is correct. So maybe I'll talk Tasty on that. But anyways, back to the last, positions, and then we can wrap it up here, and I'll show you how the crude oil, and then I had Schwab have one go off too on SPY, go off. They're set to go off at noon, or 1 minute pretty much after noon. Let's look at the S&P and the NASDAQ. So we'll see what happens. This was kind of, again, a fake out, in my opinion. And now we've just been kind of sitting around. But as we could see from the other positions, they were, uncorrelated or lower correlation. So they're still kind of, working. And we're sitting up here. I don't know. Who knows what's going to happen? I mean, if we make a new high, then the path of least resistance is upwards. Let's see how it is. I need to figure out how to look at this versus other indexes because it was a lot easier to do on Thinkorswim. So yeah, you can see that's interesting. A little bit of a relative weakness in the NASDAQ versus the S&P 500. Probably more obviously because Nvidia has gotten hit. And if you recall, obviously I don't have a crystal ball, but I talked about it looking like it was topping or had topped. Obviously, I think that this was a significant event. Now it came back, tested it. Who knows? It could blow past this. If it starts to get into this gap, as people will say, gaps are made to get filled. That's what she said. And I don't know if that'll be the case. I do think that the story is fundamentally changed. I don't think it's going to be as positive or bullish now with the whole DeepSeek thing. And I will be honest, I don't quite understand what DeepSeek is doing differently. I haven't fully looked into it because I don't necessarily care. I'm just kind of paying attention to maybe relative strength, relative weakness. But as Nvidia has gone, so has Bitcoin. I think they've had a pretty high correlation. So just kind of watch that from here, or maybe they'll kind of bifurcate. But I do think the story is a little bit damaged for Nvidia, and it's still a fine company. I mean, ultimately, what I would probably be doing, I know some other people are doing this, I would potentially be selling cash secured puts pretty far down. Let's see what we can get on Nvidia's puts here. I mean, if we go out in time, even 100 days, I mean, implied vol is whatever. I mean, obviously that's 2 sigma. I mean, you can get 50 cents for 70. If you wanted to do a put spread, I think you could definitely pull in a decent premium. Wouldn't go crazy on it, but if you also just wanted to maybe get a sign to get some shares, I mean, I'd have to look at the fundamentals. I don't know what the valuation would be at $80, but what I would like to do, and this will be part of what I talk about in the technicals versus fundamentals, if you can get them to line up, then I think you can get a skew of maybe probabilities in your favor in general. I think the thing that you need to be aware of, which I think is interesting, is on CNBC they're talking about forward PEs, and a lot of the forward PEs on, and if you don't know what that is, forward price to earnings ratio. A lot of the forward price to earnings ratios on a lot of the Mag 7 or the big tech stocks are pretty high, even I think compared to historical standards. I mean, Tesla's way high. I don't know. Part of me wants to take a bearish position on these, but I don't think it's worth it at this point to do that. I'm obviously having success just doing it on the indices. But what you need to know is that, Nvidia looks pretty cheap on a forward PE basis. It was like $30 or 30 times, which was below its average, and that seems quote unquote cheap. But the issue is that that's the forward expectation. So that forward expectation can drop, right? And maybe the market is kind of saying, hey, that forward PE is actually wrong, or that forward forecast of the earnings of the company must be wrong, and that's kind of how forward PEs come down, and then you typically need an earnings cycle for it to either confirm or deny that was the case. And so that's how that can happen. It can look very cheap on a forward basis, but it probably means that actual estimates need to either come down or need to shift a little bit, and that's what the market's doing. So that is kind of the summary update of my current positions, what I'm looking at, how I'm approaching the market. It's pretty much same old, same old. I guess we didn't really look at the VIX. I think it was down a little bit today. We can't seem to get any sustained kind of movement upwards in the VIX. I don't know if that, that's not right on Tasty. It's just VIX. So, I mean, we saw a little bit of a spike on tariff concerns. Obviously, all that kind of, those headline risks. And then it's immediately sold back off. So, again, not that that's always going to happen. I think I did maybe put some stuff on here. I would love to be putting stuff on around the 20 level. I mean, historically, I think that that's still approximately the average is 20. I want to say maybe it's a little bit lower than that now, but if I could be doing stuff around 20, that would be perfect. I'd do that all day long. Anything that's above it, I would, again, you got to be cautious. You don't want to go crazy because you can get these spikes like this, and this is very rare, but like I've talked about before, you need to expect that can happen more than you think it will. So always keep that in mind. But I think that if we can kind of do stuff in this range and have volatility just kind of fall off and rise a little bit, I think that we're going to be mostly fine, and that should be helpful for the portfolio. So that's pretty much it. I think we added a couple other kind of free trading plans down below on like a core 4 0 DTE. I haven't done much 0 TT. I guess I should touch on that. We're still working on that a little bit. Like, we can execute 0 DTE, but I want to make sure it's fully flushed out before we put that out for public consumption. And I think we want some more parameters around how it's actually selecting in terms of minimum credits and I think volatility environment. I think there's some interesting things that we could do there, and I want to make sure those are kind of up there before we fully do it, because that was my original plan, to have some of the 0 DT running, but we just been working on some other stuff, so it hasn't been as much priority. I think we're kind of seeing some of the issues with 0 DT, not issues, but they're less effective. I mean, the more people learn about them and learn these strategies, it's kind of like puts and calls. The skew basically ends up getting skewed, and it distorts options prices, and then the kind of opportunity goes away. Like I said, though, it can't fully go away long term, because otherwise people would either just always buy them or they would always sell them, right? So if they're always overpriced and people sell them, then they will likely become either underpriced or fairly priced for the most part, and you just end up paying fees. I think that there may be some filters and parameters and strategies that we're working on that you can add to make it a little bit more successful. But in general, I wouldn't rely on 0 DTE only if you have a bigger portfolio that you can do a component with, right? And I think I'm only doing like 5% in 0 DT is my plan. So it can give you a little bit of a kicker, maybe. Not that $100 is not bad for doing nothing. If you can make $100 to $200 a day on the strategy 0 DT, then I think that's good to kind of add in there. But I wouldn't fully rely on that. And like I said, one of the losses you take from a 0 DT position, I would want my other positions to be able to counter that at any given time. Especially if you're hopefully having some winners within the month. So, if your average winner on an individual, let's say, position here is $200, and you might lose $200 on a 0 DT trade, of course you could lose a few in a row. You just want to try and balance those things out is all I'm saying. So keep that in mind, and I guess stay tuned. Sorry, this got a little long-winded, but I wanted to make it a little more thorough of an update. And hopefully you'll think it's cool to watch these execute. I always think it's fun. I just basically had arranged for these to go off today like they normally would have. I just changed the date that we're doing them during the week, and then went and basically had lunch with coworkers. So that's the true way to trade with a full-time job. And that was a lot of the issue. I mean, it solved many issues in terms of both psychologically trying to manage these things, time-wise having to stare at the screen, and then like, I would get caught in an office meeting or whatever, and I might need to be managing a position. And like I said, sometimes I couldn't even trade because my position in the company didn't necessarily allow me to do any kind of trades. I think this was potentially good for people who have a restriction like that, because it's just an index. You can't influence an index. You can't have really insider information on an index. And if it's automated, then you have no input, right? So it's just going off on a scheduled basis. So hope you guys enjoy. Obviously, feel free to ask questions, comment below. Hopefully share this with someone who might find it beneficial, and we'll see you in the next one. Take care. Bye. See that obviously there's nothing there except for Simply Safe. Let's see if we can get it down a little more. So, and again, this is noon on February 5th. So, no hands. You can see I'm basically going to step away now and let this go, and you can see the magic happen. Do we get our fills? Oh, wait, there we go. Bam. Bam.